wanted to cover some of the easy and easy out strategy basics. If you want to dive a little bit deeper, you can join our free Discord. We have a bunch of strategy documents and I trade this strategy live with everyone in the Discord every single day. So what is the easy and easy out strategy? Essentially, it just is one pattern that helps us identify accumulation or distribution in the market. Now, it doesn't matter who is accumulating or distributing whatever the asset is that we're trading. It could be market makers, it could be funds, it could be smaller traders, larger traders. Regardless, it doesn't even matter at all. And what this strategy does is it allows us to pick up on if price is accumulating or distributing, and then we piggyback that larger order flow. Okay, so the first step is to identify the pattern. So I have a few examples here on the chart. This is distribution. Okay, so the pattern, simply put, is you wait for a high to form at resistance, preferably. Once the high forms, we wait for that high to be swept. Once the high is swept, we wait for a break in structure. So the break in structure has to be below the low that was responsible for taking the high. So you can see this swing low is responsible for taking that high. So we sweep it, we then break and close below here. We then return to the range between this low and this high, and we form the same pattern. So we have a sweep here, another break in structure, and here would be your trigger. Once you do get the close below the second break in structure, then that tells us that price is starting to distribute. And then the same thing goes for accumulation. So preferably at support. So we have price leading into support, and we form a low here. We then come up, we then break below the low and break above the high that was responsible for taking that low. Then we return to the range between this high and this low here. Once we return, we then form the same pattern again, and that would be your trigger or the confirmation that price is starting to accumulate. So first step is to identify the pattern. The second step is to ensure that we're trading the pattern at the correct place. If we follow the simple rule, do not buy into resistance and do not sell into support. If we're leading into resistance and we're getting accumulation, that is not the time to be trading this pattern. But if we're getting into resistance and we see distribution, that's the time to be trading the pattern. And same with accumulation. So if we're leading into support and we start to see distribution, that's not the time to be trading the pattern. If we're going into support and we see accumulation, something like this, then that's the time to be taking the pattern. Okay, the next step is to look for objectives. Okay, so let's say we're leading into support here, we see the accumulation, and then just above the accumulation, let's say right here, we have a bunch of equal highs. That would tell us that liquidity is resting above those equal highs, and if price is accumulating, then that would be the next obvious objective for price to reach towards. So that is just a basic look at what the easy and easy out strategy is. Like I said at the start, if you want to learn more, we have a free Discord and I have heaps of strategy documents that you can look at.